Hi everyone, it's Arsh Ellahi and welcome to today's video. Now today's video is going to be something a little bit different, something that I've never really done before. Before I've talked about lots of property strategies, how you can make money in property. One of the burning questions that lots of people have been asking and been getting in touch with is what's going to happen with the property market? Are we going to see a crash? Are we going to fall into recession? And I've been watching lots of videos, I've been reading lots of reports to kind of understand where we are, where we're going, and how it's going to affect everyone. I've actually made some notes, so I'm going to refer to these, so apologies if you see me look down there. First of all, I will say that if you've never been on my channel before and you like what you hear, please press the subscribe button right there and also share and like it with your friends and family. Let's address everything that's going on. Brexit, what's happened there? We've left the EU. So from a point of property and a point of the property market, there was always a level of uncertainty. What's going to happen? What's going to happen to interest rates? What's going to happen to property prices? No one really anticipated what was going to happen with the pandemic of COVID-19. So when we looked at what was happening with COVID-19 and when we had a look at what's going on with Brexit, naturally, it was always going to end in disaster. Now, I've read lots of reports about this. I've read the reports from Knight Frank, I've read the reports from Savills, I've read the reports from all the leading industry experts, shall we say, who've all come up with lots of different suggestions and or lots of different predictions. Now, I'm not here anything that I say today is literally my own opinion. Now, the way that I look at this is very much a case that whenever we come across something as large as this, and we've never come across anything as large as this before, it has to have a negative effect. Now, the way that I look at stuff is what happens in the financial markets. When you looked at the property crash back in 2007, 2008, you look at all the other crashes, when Wall Street crashed, etc. Straight away, stocks and shares, boom, plummet. Which means that naturally the money markets take an absolute dive, which have an absolute massive effect on everything else around us. People lose hundreds of thousands, millions, even hundreds of millions on the money markets when something like this happens. It takes a natural effect on everything else. Now, I'm going to be talking about COVID-19 specifically and 2020 as to what's going to happen and what I predict is going to happen to property prices. Now, some of the reports have said that we're going to see a slight decrease by 3%. If you look at the history of what's happened with property, I don't think we've ever had a situation like we are in today. I don't like using the word, but we're in unprecedented times. But when we look at what happened in 2007 and 2008, property prices actually dipped by 20 to 30%, and that was nowhere near as bad as what we see today. So therefore, people saying that we're going to dip by 3%, I think is highly unrealistic. And I fear for people that read reports that say that it's only going to dip by 2 to 3%. We should be gearing ourselves up ready to understand that property prices are going to potentially be dropping by 20 to even as possibly as high as 30%. I've been reading reports from, like I say, Savills. Some agents have already stated, some estate agents have already stated that their sales have dropped off the cliff. They've dropped off by 84%. A lot of the offers that they had prior to COVID-19 have now fallen through. Up to 70% of offers have fallen through. What does that mean? We've also got to look at what's happened as an industry. As an industry, we look today, even if you wanted to buy a property, it's pretty much impossible for you to buy a property. Let's have a look at what's happened in the mortgage markets. Majority of the mortgage companies have pulled their products. They said, we're no longer lending 85%, 90%. Why have they done that? Are they slightly concerned about the property value as well? Think about this logically. If you're buying a property today at £100,000, and let's keep the numbers quite simple here, a mortgage lender's worried that in 2 months' time or 3 months' time, that if they lend, let's just say 85%, which is equivalent to £85,000 on a £100,000 purchase. If they lend £85,000 on that house, and let's just say that the property value decreases by 20%, that house that they valued at £100,000 a couple of months ago is now worth 80. They've already lent 85,000 on it, which means that they're already over leveraged, which means that technically speaking, the owner's in negative equity, the mortgage company's in negative equity. How are they ever going to claw that back? So mortgage companies are going, whoa, okay, hold on. Let's just see what's going on here. And it's a sensible approach because they don't want to have a loan book which is over leveraged. So these are things that you've got to take into consideration. You can't even buy a property today because estate agents are closed. Whenever before have you seen large national brands like Connells pull out of the market, say, you know what, for the moment we're shutting everything. It's unheard of. Again, staff are all being furloughed. Lots of people have been laid off. We've got to look at this from a global and from an economy state. All the people that have been laid off, what's happened to those? They've now become unemployed. And if they were thinking about buying a property, first of all, they can't because there's no mortgage products available for homeowners. Or if they do want to buy, they've got to put down a substantial deposit of up to 35%. So the minimum that they can put down right now is 25% and plus. So if you're looking to buy a house for £100,000, you've got to need a deposit of a minimum of £25,000. Plus you've got potential stamp duty, plus you've got your legal fees, plus you've got your surveyor's fees. Let's not even talk about surveyors yet, because even if you were to get mortgage agreed, chances are the mortgage surveyor may not go into that property. If the property is occupied, then chances are they're not going to go into that property. A very high chance they're not going to go into that property. If it's empty, it's a case of whether they want to travel to that property. So mortgage companies have pulled out. Estate agents, you can say we can call them pulled out. Surveyors have pulled out. When have you ever seen this before? It's never happened before. So estate agents are closed. A lot of their staff have either been furloughed or laid off, which means that ultimately what's going to happen is that it's going to have increased the unemployment. Now, whether they go on to claim universal credit or whether they decide to, tread water throughout this period, again, is a different scenario. I spoke to bridging lenders yesterday, a lot of them saying that they're now only lending up to 60%. Now, if you don't know what a bridging lender is, it's a term of short-term finance. So let's just say that you bought property through auction and you've got 28 days to arrange some finance. A normal mortgage company wouldn't be able to deliver within that timescale. So a bridging lender will say, okay, I understand that you bought it in auction, you need the money in 28 days, here's what I'll lend. And normally they would lend up to 80%. They've dropped their parameters down to 60%. Again, taking a very cautious approach as to if you buy something today, they don't know what it's going to be valued. Again, this is a crystal ball scenario because no one knows what's going to happen. I predict 20 to 30%, but that is based on historic movement. Talking about unemployment, first of all, wages have fallen. If you're furloughed, you get approximately 80% of what you were previously earning. So they've dropped. Unemployment has gone through the roof. So affordability for a mortgage is pretty much becoming non-existent. That's why companies have offered mortgage breaks and mortgage holidays. I think I've done a whole different video on mortgage holidays. So please watch that, because I wouldn't suggest taking a mortgage holiday, because although it seems great that you're going to get 3 months worth of respite, it may not be the best thing to do right now. If you are looking to buy a property, and a lot of people have come to me and said, is now the right time to buy? It's a fantastic opportunity if you've got the funds and the ability to buy. Because if you wait approximately a couple of months And I still don't believe we've seen the full effect of what's going to happen in the property market. If you wait a couple of months, we're going to see lots of opportunities come to the forefront. And that's quite a negative thing to say, because we're taking advantage of other people's financial circumstances. Now, if a property was on the market, or let's say that someone bought their house 2 years ago, and they bought it pretty much the highest of the market, and again, let's just use round numbers at £100,000. And if they're now looking to sell based on the fact that they thought it was worth probably slightly more than that, chances are it's probably worth less than what they purchased it for. And then they'll have to have a look at what gearing or what mortgage or what funding they've got on that property. Chances are all the deposit and everything that they put into that property from the outset has pretty much been wiped out as a result of the reduction in the price. So from a buyer's point of view, this is where you've got to up your game. First of all, yes, you can go and say, well, in actual fact, I don't need a mortgage. I've got the funds to do it. I can do this. On the other point of view, you could also say, well, I'll tell you what, your house was worth 100 grand. It's now worth 80 grand. I can structure it in a way where you can still potentially get out of this, where it's not going to cost you anything. You still may actually make some money, and you create stuff like lease options. You can do rent to rent. So there's going to be lots of opportunities for creative strategies, because there are going to be lots of people in a financial mess. So take all this in. Don't take it lightly. With everything that's going on, with mortgage debt, with everything that's happened in the financial markets, with Brexit, we will go into recession. You know, the bank have pushed our interest rate to an all-time low. They're giving out grants left, right and centre. Now, we all think that this is great because this is pretty much support from the government, and I'm one to champion the government because they've done a phenomenal job. We have to also take into consideration that at some point this has to be repaid. They can't keep printing money and borrowing money with a view of, don't worry, we're helping the economy. Yes, they are helping the economy short term, but long term, this has to be paid back. The business grants, all the additional support, the furlough, everything all has to be paid back. And that will come in forms of higher taxes. So once we start to stabilise, we will start to see an increase in the interest rate. That has to happen. We can't stay at this level forever. If you've got funds in the bank, now may be a good time to invest it, because let's face it, your money in the bank is pretty much worthless. It's not doing anything. If anything, it's probably depreciating. So these are things that you've got to take into consideration. You know, when we looked at what's happened, 2020 has been a real wake-up call for us. Brexit, we already knew what was going to happen with Brexit. You know, we've been talking about Brexit for how many years now? We knew that there's going to be a day where we're either going to stay or remain or leave. We decided to leave, and we were about to start gearing up to feel the effects of that. And then boom, we get hit with the second whammy. And that was with COVID-19, which we couldn't have predicted. And we are going to feel the effect of COVID-19 in terms of what's happening. So people have been laid off, people have been, jobs have been lost. More importantly, one thing I will say is that there's going to be lots of opportunities for commercial buildings, because some of the large companies, they've now felt the power of people working remotely. Before, there was a stigma about people having to go to an office and work in an office environment. Lots of companies have tried working remotely for many years. And give you an example, BT, Npower, and some of the large national companies, they started to try and create remote working many years ago. And they thought, oh mate, there may be too much of a disruption to our service, etc. Well, COVID-19 was the thing that they were looking for. They had no option but to tell everyone to start working remotely. Now, all these big office buildings that they were previously occupying, do they really need that overhead anymore? Which means they've experienced now that if I can get the same level of productivity out of our staff from working at home, Do we need that big building? Does it really serve us to have that big building? Yes, we may need to have meetings, but we can hire serviced offices from time to time. Do we need to have that £100,000 rent or that mortgage to that building? No, we don't. So we're going to see lots of businesses who have adapted to this change, who have worked from home, who have still been able to trade, move forward into I wouldn't call it co-living, but it's working from home environment. So there's going to be lots of what I predict that there's going to be lots of big buildings, commercial buildings come available. Now, if you own one of those buildings, you may want to start thinking of what your plan B is. Plan A was that company had been letting it for God knows how many years. Now, plan B is that if they decide to vacate that building, what are you going to do with it? So this is what you've got to start thinking. You've got to start forward planning now, because there is no, for those that fail to plan to fail. I think that's the right way around anyway. So guys, I know it's a bit of a negative post, but there is a silver lining to it. You've got to keep going. Hopefully, you would, if you're in business and you're in property, you would have seen lots of things happening in this. Now, if your tenants have started asking for deferred rent payments and stuff like that, you've got to work with them, because you've got to remember that you're a business as well. I spoke to one landlord a couple of weeks ago, and he said, well, I'm letting them have 3 months rent free. Now, not everyone can afford to have that luxury. So you've got to try and help work with your tenants, whether they get additional support from the government, whether they apply for universal credit, etc. But work with them. But more importantly, use this time to understand what's going on in your business and learn how to survive from this. Because if you survive from this, you'll come out of this much stronger as a business and prepared for if something else happens like this in the future. On that note, guys, I wish you all a great week. Now, one thing I am going to say is that this is a really important week for me, because on Friday, the 1st of May, I launch my podcast called The Property Rebel. And what makes The Property Rebel really different is that it is a one-take, completely uncut, raw editions and episodes of what it takes to be a property professional and how you can succeed. So there's not going to be lots of hosts. This is a podcast like no other. There's not going to be lots of other people that we interview. I'm going to be telling you what you need to do to succeed in property, looking at all the different strategies. It's being launched on Friday, the 1st of May, 2020 at 10 a.m. And you can find it on iTunes and also Spotify, as well as Stitcher. So guys, I wish you all the very best of success. If you've liked the video, please like it. If you're the first time to our channel, please press subscribe. More importantly, leave me some messages below and I'll respond to as many as I can. Thank you.